All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for tuning in. If you're just tuning in, if you've been with us all day, that's been my job to make you stay. So I've been with you all day. How about that? It's been a lot of fun. I got that Friday feeling. Let's get after it and see what these markets are doing. Let's take a look at corn. See what this corn's doing right now. 3.5 cents higher today, 618.5. We're 6 cents off the lows, but this is giving back most of its gains today. We've got a 4-cent gain in Dees to 623 even. That's not good to see as we get into the last couple hours of trade here. Let's see what soybeans are doing and see if they've done the same, and they have. 34.25 cents higher now, and only in August. 1643.5. We're well off the highs, almost by about 28 cents off the highs. November is up 31.75 cents to 14.72 1/4. All right, those two are weak, so I bet you this is going to be bleeding into the wheat here. There we go. 13.25 cents lower in SEP wheat. 803 3/4 is last. Couple cents off the lows, folks. March out the deferreds is 11 cents lower at 840.5. Okay, let's see what's going on in Kansas City. The hard red wheat there, HRW, 15.75 cents lower. 874 is last, and SEP, as we just give up the ghost here, it's all over. March 14.75 cents lower to 885.25. Can't hold those bids. Let's see what's happening in spring wheat then. That was lower anyway. 21.5 cents lower, even more. September's at 906.5. Might lose that 8 handle. Well, we've got March in the middle of the deferreds down 19.5 cents to 930.5. Finally, let's take a look at cotton. I bet you this one traded lower too. Oh no, it's still up. 30 points higher in that D's contract. 96.51 is last. All right, let's bring in our guest analyst, Todd Horowitz, joining us by phone from Las Vegas. Thanks for being on the line, Todd, with Bubba Trading. What are your thoughts when you see this stuff kind of roll over a little bit here?
You know, Scott, you and I have talked about it, and you nailed it the other day when you said that they weren't going to account inflation in the right way. And I think that's what we're just seeing in these markets. There's really a very lethargic action. And it looked like this morning and yesterday they were going to run. And then suddenly it's like they just turned around and decided to stop. And, of course, wheat obviously being the biggest, the worst of the performers right now. You know, I think we're just in that midpoint, and we're just kind of, worming back and forth and until we either can break to bring in the new money, which I think is what the funds are trying to do, or we have a reason to run. We're kind of in that midpoint, kind of playing the weather back and forth. And, I think that's really, really lackluster or lackadaisical type of trade right now.
Well, I mean, we had a little bit of a swoon earlier in the day here today, and it looked like it was risk on for commodities across the board. But really, as of late here, we saw corn was up, say, 10 to 12 cents. We broke down about up 5-6 cents and rallied back up to that 10 to 12 cents higher level. But now, boy, it's just kind of giving up the ghost here. We've got wheat kind of dragging everything down. It felt like we were trading on fundamentals. They're hot and dry. Everybody's worried about what it's going to be like over the weekend, but now it looks as though people are getting a little bit nervous about holding it. So it'll be interesting to see if anything's changed that way, because we've had one heck of a week when it comes to economic indicators, Todd. I think you'd agree. We had the horrible consumer confidence number we had on Monday. We had 0.75% base rate hike in interest rates on Wednesday. We had a recession on Thursday, and then those PCE today, the inflation.
Yeah, we don't count the recession anymore, Scott. They changed the rules now. No, but I mean, look at corn's going to be lower before we get off here. I mean, again, this is very ugly at the moment right now, and I think it's just that lackadaisical trade, and I think that the fund money is trying to force them liquidation so they can buy them, because I can't believe that anybody would really want to be short these grains with what's going on around the globe and with the weather here.
Well, I mean, as you say that, the other stuff's not really rolling over like the corn is right now, so maybe you're right. It'll be interesting to see if they push it down here so they can get a better price going into the close of the day. And, it is the end of the month and the end of the week. So this is going to be a pretty important close, right? Because this is what the technicians will be looking at, right?
Yeah, 100%. This is going to be a very important close today. And it wouldn't surprise me to see them close kind of flattish here, because that's really what it looks like they're trying to do.
All right, well, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz from Bubba Trading about those livestock after this. All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy, and let's use that as a cheap segue into taking a look at these cattle markets. They haven't really been doing that much. We're a little bit better now here in that live cattle market. It's been lower, now we're higher on the day by about the same as much as we were lower. So we're just kind of rotating around unchanged. 42 cents higher in August to 136.60. And again, we've only had a 70-cent range over there. We're close to the highs. We're only 3 ticks off it, right? So 7 cents away from the highs in August. Diesel's 37 cents higher to 148.15, and that too is about 15 cents off the highs there. So let's take a look at what's going on in the feeders. Now they might be getting a little bit of a boost because of this corn coming off, and they are. Look at this. Higher on the day now in that August feeder cattle market, 97 cents higher to 178.40, 35 cents off the highs. And let's see, October up 85 cents to 183.57. So what is corn's loss is feeders gain. How about this? Lean hogs. Let's see what they're doing then. This is all change here, folks. Grains lower, meats higher. $1.52 higher in that August hog contract. 120, spot 65 is last. We've got December up 67 cents to 87.60. Let's bring back in our guest analyst who's been patiently waiting in the wings, Todd Horowitz with Bubba Trading in Las Vegas. Todd, any thoughts about these meat prices?
Well, I think the meat prices are probably, as I've said quite a bit, as I think they're probably where they're going to be. I don't think they're going down. I just don't know how much more room they have to go on the upside unless there's some tragic news. But I think we're in pretty good shape, and I think they're going to hold their strength. I just don't see a tremendous amount of upside momentum that can carry us much farther. So I think you get crude oil, which has been exploding again. You get a lot of factors that are not very conducive to higher beef prices, right? I mean, you get the recession, consumer confidence, petroleum, gas. Everything looks too expensive, so it's got to affect. But in the meantime, we've been able to hold in these nice higher levels for an extended period of time, which to me says that they're pretty strong, but there probably isn't a dramatic amount of room to go to the upside.
And we've got a lot of things to kind of work through here too. We have to see what happens with this economy, short and sharp or deep. I mean, how long? What is this recession going to be like? Is it going to be something that we have to deal with for a long time, or is it going to be short? So there's a lot of things out there that still are going to come into play. I really appreciate you bringing up all that stuff. Great content. Thank you very much. Todd Horowitz with Bubba Trading coming to us from Las Vegas. I'm going to bring it back home to Nashville so that I can throw that over to Suzanne.